Chips getting crushed, sold down, and basically swapped out here. Is the market breaking or just taking a breath?
I mean, I think this is a blip. To me, it's a golden buying opportunity. I think the bar's going to be a lot worse than the bite when this all plays out. It's a political rhetoric. We're going to see some of this nervousness, but it's not stopping the AI revolution. I mean, I believe NASDAQ 20,000 is something we'll hit before year end, which we're telling our clients, you have that basket of names, you own them on days like today.
Despite the most recent pullback that many semiconductor companies experienced, which sparked controversies alongside many questions about the present and future of those companies, the renowned Wedbush analyst Dan Ives has some incredible news for every tech enthusiast and investor. Ives thinks that this pullback is the perfect buying opportunity, and that the leading company in the sector, Nvidia, will continue leading the AI revolution. But why does he think so? That's exactly what we will go through in today's video. So please, don't miss out. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
So, Dan, you're not too concerned about what could be a broader correction in these markets if we saw big tech continuing to get sold down?
I mean, Dan, I think we're going to have a historic tech earnings season. I think the next few weeks, semis, software, cybersecurity are going to be robust. And I think when you look at this AI revolution, it's still 9 p.m. in a party that goes to 4 a.m. We're going to have some of these sell-offs. And of course, the nervousness with some of the Trump-Taiwan comments. But we've been here before. On macro type of worries, you own these names, geopolitical, because I think when we look at where this is all heading, this is a tech bull market that's going to continue for the next I think 2-3 years.
Former U.S. President and current presidential candidate Donald Trump has sparked controversy with his recent statements in an interview with Bloomberg Businessweek, as he suggested that Taiwan should pay the U.S. for its protection amidst escalating Taiwanese-Chinese tensions. Trump's remarks had a significant impact on major tech stocks, including Nvidia. Nvidia's stock plummeted from nearly $130 to $117, primarily due to its reliance on Taiwan's TSMC, which manufactures about 90% of the world's most advanced chips. Often called the Silicon Shield, Taiwan's critical role in the global chip supply chain makes it vital to Western interests. A Chinese invasion would disrupt this supply chain, creating a significant technological disadvantage for the West. This strategic importance is why the U.S. has supported Taiwan's defense for decades. Therefore, if a second-term Trump administration demands financial compensation for Taiwan's defense, which Taiwan may not be able to afford, the likelihood of a Chinese invasion could increase. Such an invasion would disrupt TSMC's operations, reducing chip output and impacting the revenues of all chip companies, thereby affecting stock prices. It's important to note that Trump's comments didn't only affect Nvidia, as the stocks of the company's Magnificent Seven peers also fell drastically due to the uncertainty of the future, and now many investors are extremely anxious because of this. But here comes Dan Ives, reassuring the whole tech community that nothing is going to happen and that these companies are not quitting. Instead, they are just taking a breather from an amazing run that lasted for months. Ives also believes that the current circumstances are providing a huge room for exaggeration. So, what did Ives say in detail? Let's find out. Hello, everyone, and welcome back to Investocracy.
So, Dan, you say the party continues from this point on. And look, fair to say we've seen this movie before, but how seriously should market investors be taking those comments from Donald Trump on Taiwan?
I mean, I think we've seen it from Trump before. I mean, going back to when he was president before, and our view then was the bar's going to be worse than the bite, and that's ultimately played out. I'm not saying that we can't have some tariff increases. There's going to be shots across the bow with China, but they ultimately are going to have a tightrope that plays out here, And I believe tech comes out, strong gets stronger. This is not going to spoil the AI revolution party. You own Nvidia, you own Microsoft, you own Apple.
Dan Ives said in an interview with CNBC that the market is not breaking, but just taking a breath. Additionally, he said that he believes that this is a golden buying opportunity, stating that the drop experienced by the market is thanks to political rhetoric and nervousness, and nothing can stop the new sweeping revolution of artificial intelligence. He even went on to say that he believes that NASDAQ 20,000s will happen even before the year ends. Additionally, Ives doesn't believe that a market correction is something out of consideration, even if major tech companies keep selling out. On the contrary, he thinks that such a moment will mean a historic season for the tech industry. Moreover, he believes that these major tech companies will be able to maintain a very high level of efficiency in terms of the products themselves, and parallel to this, the demand will keep growing robustly. Ives added that it's too early to judge the tech scene, acknowledged the ongoing anxiety, and addressed the Trump comments, admitting that such macro-type worries can easily affect a whole market. But he added that it's not the first geopolitical challenge the tech and AI scene faces. This is because the industry was indeed affected by events like the Russian-Ukrainian war and the Chinese-American trade war. Dan Ives believes that the market will recover and the big tech players will keep their dominance. He also expects the market to be tech-full, dominated by AI for the next 3 years approximately. So, what is Ives's advice for investors at the moment after Trump's comments? And should you keep investing in big tech players? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
For years, we've been talking about the concentration, I think, of power and production manufacturing of the world's most advanced chips in Taiwan, particularly from one company, that's TSMC, which accounts for a huge proportion of the most advanced chips in the world. Now, these comments from, I think, President Trump you're alluding to are interesting. There's two things I want to pick up on. He says in his comments in that Bloomberg Businessweek interview, they took 100% of our chip business. Now, what he's referring to is a trend over the last, let's say, 15 to 20 years where America was once very, very advanced in the manufacturing of chips. But then a certain trend occurred, which was what they call this fabless model, where American companies were designing chips, but manufacturing is difficult. And you saw Taiwan in particular begin to pick up the manufacturing. So if you're a company, you design a chip, you don't have to manufacture it yourself. You can outsource that, contract that to TSMC. And that's how TSMC and some of the other Taiwanese chip firms became so big. But it's also the reason why American tech companies have thrived. And Apple, Nvidia, Microsoft would not be able to do what they do without TSMC. And imagine these companies now had to invest billions and billions of dollars in advanced manufacturing of equipment. You imagine these margins we look at from Apple and some of these other companies, they just wouldn't exist. And so there are two parts, I think, to when President or former President Trump says that the chip manufacturing has moved out of the States. Yes, it has done, but it's exactly that trend that has allowed so many of what are the world's largest firms now, American firms, to thrive and be cutting edge.
Ives said that this is not the first time Trump sparked controversies with his comments, and even though they will definitely have some negative implications on the market, Ives believes that at the end of the day, the bark will be louder than the bite, which means that it can't get any worse from here. He also expects these tensions to last a little bit, especially with the growing tensions between China and the United States, which will definitely have a negative impact on the market. But at the end of the day, he believes that these tensions will be solved ultimately. And he remains optimistic about the technology sector's resilience and growth despite geopolitical tensions. He is also confident that the ongoing advancements and investments in AI will continue unaffected. This is why he recommends holding shares in major tech companies, including the AI market leader, Nvidia, as he believes the company will soon reach a $4 trillion market cap. Undeniably, Nvidia's GPUs are the industry standard in accelerating complex data center workloads like AI applications. The advisory company Forrester Research recently wrote that Nvidia sets the pace for AI infrastructure worldwide, and that without Nvidia GPUs, modern AI wouldn't be possible. This has helped the company to cement its leadership and enhance its ability to monetize AI by branching into other product categories. Indeed, Nvidia's portfolio includes adjacent hardware, like CPUs and networking equipment, as well as subscription software and cloud services that support AI application development. And it's not just Dan Ives who's going all in on Nvidia. As Goldman Sachs' Toshiya Hari recently said, that Nvidia will remain the de facto industry standard for the foreseeable future, given its competitive advantage that spans hardware and software capabilities. He added that Nvidia's annual introduction of new products and platforms sets a pace of innovation that keeps it at the forefront of the industry. So, should investors buy Nvidia shares on this dip? It's important to note that even though Nvidia stock pulled back, the company's fundamentals remain intact, and Wall Street doesn't see any problems with the firm itself. In fact, analysts expect Nvidia to grow non-GAAP EPS at 38% annually through fiscal 2027, and that consensus estimate makes its current valuation of 66.7 times adjusted earnings look good. Therefore, we think that investors should feel comfortable buying this stock today, as it could reward them massively in the future. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comments section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.